Hey besties, I've been scanning my YouTube comments and I've got to address something that's been grinding my gears. Scammers. Regardless of if I post a short or a long form video, within a couple minutes, there seems to be a scammer in my comments. Half the time, it's some weirdo promoting FX trading or crypto or who knows what, and the other half of the time, it's someone who's stolen my headshot and trying to impersonate me and get people to text them on WhatsApp or Telegram. So I thought it'd be timely if we talked about scammers today. Financial scams are rampant. In fact, per the FTC, fraud cost consumers $8.8 billion last year. That's up 44% from 2021. But since I'm Vivian, your rich BFF, and your favorite Wall Street Girlie, I'm gonna walk you through the biggest scams in the financial arena, and I'm gonna tell you why they're scams, how to avoid them, and in some cases, what you should do instead. As always, please like, comment, and subscribe to learn more about being good with your money. Let's get to it. First up, Ponzi schemes and MLMs. When you hear the term Ponzi scheme, you're immediately thinking of names like Jordan Belfort and Bernie Madoff. It's essentially where you rob Peter to pay Paul. And typically what happens is someone promises a ridiculous investment return and then isn't actually investing your money and just taking it. MLMs, on the other hand, stand for multi-level marketing, and it's a controversial marketing strategy that involves individuals selling products to the public, often by word of mouth and direct sales. So what makes it controversial? Well, while the individuals peddling these products do get paid to sell items like cheap leggings, supplements, and low-quality skincare, they get paid more to recruit others into the sales force. Think about it this way. The leader of the MLM recruits people to sell the product. We'll call them A Squad. A Squad gets paid to sell product and recruit others. They recruit their friends and family. We'll call them B Squad. A Squad is thrilled because they're getting paid good money to recruit B Squad, and they'll get a commission from all of the products B Squad sells, and further commission from any sellers B Squad recruits, aka C Squad. This keeps going and going. While the folks at the top of the MLM may see strong results, this definitely isn't the case across the board. According to the Federal Trade Commission, in a report that studied the business models of 350 MLMs in the US, at least 99% of people who join MLMs lose money. In part because they have to buy the product themselves and take on low quality inventory that doesn't sell. Net, if something seems too good to be true, it likely is. And if a company's business model is based more on recruiting more members than actually selling the product, proceed with caution. 2. Payday loans. These are short-term loans that lots of folks have used to cover emergencies and bridge gaps between payday and when bills like rent and utilities are due. I absolutely hate these because they prey on lower income folks who don't have as many options and need cash in a hurry. Payday loans are a predatory lending practice and will charge insanely high interest rates. These high interest rates make it harder for folks to pay these loans back. And people who take on payday loans often get locked in an ongoing cycle. One payday loan creates the need for a second, creates the need for a third, and so on. Instead of getting trapped in this very dangerous real-life squid game, instead consider a personal loan with a lower interest rate from your bank, or use a tool like Monevo to compare rates for personal loans from reputable lenders. The interest rates on these loans will be significantly lower than payday loans, and you'll be in a much better financial position. 3. Venmo scams. It seems innocent enough, but your friend gets a deposit in their Venmo of $3,000. Oh my goodness, they were not expecting that money. And then the person says, "Oh my gosh, I sent this money to the wrong person. Could you please send it back?" Unfortunately, you should think twice before sending that money back because oftentimes these scammers are using stolen credit cards or bank account numbers to transfer you this money. When you send the money back, those funds will go into their account, and then eventually the stolen funds will be removed from yours. You will be out that money once the victim's bank gets the complaint, but your real honest money will go into their account. These days, Venmo has a lot more protections like, hey, put in the last 4 digits of your friend's phone number before you send the money. So these mistakes are significantly less likely to happen, and if they really did make an honest mistake, they should contact Venmo, not you. Do not send money to random strangers on Venmo. 4. Whole life insurance. There's 2 main types of life insurance. 1, term life insurance. You pay money so that if you die, your family gets a payout to help them along. Easy enough. On the other hand, 2, whole life insurance has this same death benefit, but also has an investment component that allows its value to grow over time. And a lot of scammers on social media are selling whole life insurance or IULs or MPIs, whatever they want to call them, as great investments for everyone. But in reality, these are only good investments for high net worth folks because the upfront fees are so incredibly large. In fact, MetLife determined that an average 30-year-old male would pay $672 a year for 20 years of term life insurance and $8,320 a year for whole life. For the average person, the money that would be required for the upfront costs of whole life insurance would be much better invested in the stock market. You'd see meaningfully higher returns, and for all of the times that whole life insurance is touted as an amazing investment, it's missing an important caveat. It only makes sense if you already have a lot of money. And last but not least, identity theft. Sure, it's well and good to talk about how to prevent these scams, but what happens once someone has already stolen your identity? What should you do? Well, first things first, you should file a complaint with the Federal Trade Commission at identitytheft.gov. They will help you create a personal recovery plan, track your progress, and pre-fill forms and letters for you. 2, you should contact your financial institution like banks and credit card companies and close any accounts that you did not open. 3, you're gonna contact the IRS and mail or fax form 14039 to the IRS to prevent any future tax returns from being submitted using your information. These fraudsters are gonna try and go after your tax refund if you get one. And 4, last but not least, contact one of the 3 major credit bureaus to place a fraud alert on your credit accounts. Here are their phone numbers on the screen, and I'll also add them in the description so that you can have easy access. It's super scary to feel like your personal info has been stolen and scammers are getting more and more clever. But acting quickly is key to getting back your financial footing and mitigating those damages. At the end of the day, as people feel less secure in their financial situations, they're more likely to take risks that may expose them to financial scams and harm. I hope this never happens for you. But the 3 main takeaways are: 1, if it sounds too good to be true, it likely is. 2, don't trust strangers on the internet. And 3, if something bad does happen to you, acting quickly will help remedy it sooner rather than later. As always, thanks for watching, and make sure to like and subscribe for more money, finance, and investing tips. See you later, besties.